Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. Let's look at the upcoming Bank of Japan interest rate decision, monetary policy decision taking place on Wednesday, the 31st of July. And we could see the month end with a bang. Certainly it's coming slap bang in the middle of a week that is going to see massive volatility because we've got the biggest week in terms of earnings. And we've also got the likes of the FOMC, the BoJ and the Bank of England all stepping up. Now, there's a good chance that we could see the Bank of England cut rates and the Bank of Japan hike interest rates. And so I wanted to provide a preview for this meeting in particular to give you a guide on where things might end up and how we could see things move around at this meeting on Wednesday. Now, it's notable that when you're looking for this event in terms of the calendar, it never actually gives you a specific time. It always floats around. I mean, it depends on the time where you are in the world, but for us, it's roughly 3 o'clock in the morning, 3:30, 4:30. So it's changeable. It's not necessarily as fixed as some of the other central banks. But let's get into it. First and foremost, here's an overview of the big ticket items over the course of the week. We do have a host of other key economic data points coming out early Wednesday anyway, industrial production, retail sales in particular. But really, it's all about that Bank of Japan interest rate decision, which comes out on Wednesday morning. We've also got the quarterly outlook report as well. So plenty for Japanese yen traders to be sinking their teeth into, and also the likes of the Nikkei. Now, talking about the Japanese yen, this is an overview of the yen in relation to the Nikkei 225. And it really highlights the fact that the Nikkei has been a massive outperformer. It's been enjoying really significant strength off the back of Japanese yen weakness. And so that is a key thing coming into this, right? We've got question marks around whether we're going to see a potential turnaround in terms of the Japanese yen. We have been seeing strength recently. If we see a continuation of that, you're talking about maybe not a massive decline in terms of Japanese equities, but certainly the possibility of underperformance rather than outperformance is that tailwind for Japanese businesses where they're able to sell their goods abroad at a much more competitive price essentially is eroded, and we see that pattern reverse. So that's the backdrop to all of this, right? That we have seen Nikkei and Japanese stocks doing very well off the back of Japanese yen weakness. And so the question mark here is whether we are seeing a top here for the yen. In terms of that relationship, we can also see that the relationship is not only the Japanese yen versus or dollar yen versus the Nikkei, but also the likes of the dollar yen against the Nikkei in relation to the US stock markets, or on this occasion, the Dow Jones Industrial Average. So again, it's that relative strength of the currency informing us over the potential for those underlying businesses to outperform or underperform on a global scale. In terms of what we're looking at from an economic side of things, I've got a few things that center around inflation. Now, of course, Japan has had a problem with inflation for a long time now, and the recent period where we've seen the UK exhibiting double-digit inflation, similar with many regions within the Eurozone, also seeing sky-high inflation in Canada and Australia and New Zealand and the US. Well, we didn't see sky-high inflation, so to speak, in Japan, but we did see a nice rise for inflation that broke them out of this cycle where essentially prices didn't change in Japan. Now, that is something that the Bank of Japan wanted. They wanted to be able to get up to a 2% target and maintain around that level. They don't necessarily want it at 4%, but they want it to sustain beyond this period. And that has been the key element, right? They want inflation to remain at 2%. They don't want it back down towards zero. And they want wage expectations to fuel that. So they want expectations of wages to be around 2%. They want inflation to be around 2%. And recently we have seen another uptick in terms of inflation. You can see here the sort of core Tokyo reading moving up to 2.2%. Tokyo is particularly notable. Let me just quickly go through to this one here. So this is the Tokyo core versus the nationwide core versus the US core CPI. So what we can see here is a couple of things. First and foremost, we're seeing that narrowing between inflation in the US and inflation in Japan. But also we're seeing that Tokyo core reading at 2.2 is an uptick compared to where it was a month earlier. But also you can see here it is ahead of that nationwide figure, and you can see a very close correlation between the two. So if you're looking for Japanese inflation data, always look out for the Tokyo numbers first. They come out ahead of the nationwide number, and by and large, where Tokyo goes, the nationwide number does seem to follow. In terms of the monthly breakdown for Japanese inflation, this is not core, this is overall inflation. You can see the pattern we've seen across much of the Western world over a resurgence in inflation at the beginning of 2024 has also been the case here in Japan. It's not a massive reflation trade, but it's tracking over the past 4 months at or above that 2% target. Of course, 2% target would mean we'd need to be below 0.2% on a monthly metric. The last 4 readings, we have been at or above that 0.2 mark. So that is positive. It means that recently it has been tracking above that target. It could possibly mean that inflation is here to stay, but also it raises the possibility of action from the BoJ. In terms of wages, like I said, that's a key element. And you can see in the past, we've seen sort of stuttering wage growth at 1%, below 1%. Of course, the COVID pandemic, things were very different. But you can see that we appeared to have sort of jolted into this new phase where we're between 1% and 2%. And we need to see that maintained really for any hope that the Bank of Japan are going to tighten in terms of higher interest rates. Part of the deal this time around comes down to JGBs, so Japanese government bonds. And what we've seen in the past is that the Bank of Japan have essentially been employing something called YCC, or yield curve control. They essentially bought up the vast majority of government bonds in a bid to control yields and keep them under control. Now, they've adopted that and then they aborted that, and the fact that they've aborted that means that we're looking at a possibility that when these government bonds roll over, they don't necessarily just take them all up. They slowly start to see these roll off of their book. Now, this chart highlights just how significant the bond purchases have been for the Bank of Japan. You can see in relationship to GDP, way over and above what we've seen for lights of the ECB and the Federal Reserve. And you can see whilst in the past, when you've seen significant asset purchase facilities, they are sort of tapered away. We haven't really seen that too much for the BoJ, and that's something that is going to be key for this meeting, because it looks likely that they're going to set out their stall in terms of the pathway for tapering those JGB purchases, likely going to outline a move from 3 trillion yen down, from 6 trillion yen down to 3 trillion yen, the pathway to which is likely going to be a protracted move, because of course, we're moving from a phase where essentially the Bank of Japan is the main shop in town in terms of demand for these products. And they need other people, individuals, businesses to become interested in buying up these government bonds. And that's going to likely raise yields because the demand just isn't there to the same degree. In terms of interest rates, of course, we haven't necessarily seen much by way of the BoJ. We've seen the move out of negative territory. You can see the black line along the bottom here, essentially just tracking sideways as we see all these other central banks hiking interest rates. And that's why we've seen massive appreciation for pretty much every currency against the Japanese yen. But you've got to think, well, we're now moving into a phase where we're expecting to see the ECB cut interest rates. We've seen the Bank of Canada do it. We're expecting to see the FOMC cutting in September, the ECB. Pretty much everyone's outlining their stall, the RBNZ as well, for interest rate cuts at a time where we're pointing towards a possibility of an interest rate hike from the BoJ. So do we see some kickback in terms of that trade? We have seen some. The question mark is how much more do we see? And part of that is going to probably likely come down to whether they start to hike interest rates and lay out a stall for further interest rate hikes. 10 basis points is what is being factored in here, but you can see markets, according to Icon, pricing a 70% chance of a 10 basis point hike. this time around. That's not necessarily a view that is shared by all. If you look at, say, trading economics, the economic calendar says that they're going to keep rates steady. So this is likely to be the part of the meeting that there's significant uncertainty around. That sort of bond tapering, laying out their stall on that front, is probably going to be the area that, you know, if it happens now, they'll probably just tell us that they'll do it next meeting. It's really down to this interest rate hike and whether markets really care, because, you know, we're still looking at interest rates that are near enough at zero, and when we're seeing the other central banks with interest rates in fours and the fives, you know, this argument that, oh, okay, well, it's a relative move in favor of the Japanese rates, and suddenly it's going to become more attractive to park your money in Japan. I mean, look, I don't think going from 0.1 to 0.2 is suddenly going to make everyone send them money over to Japan to get into their fixed income products. But nonetheless, it does start to turn the tide in terms of sentiment and potentially make people think that the worst is over for the Japanese yen. Now, the Japanese yen, as we can see here, has staged a rebound of late. I'm just going to go full screen. So this is the US dollar against the Japanese yen. In terms of the long-term trend, of course, it is a bullish one. It's been a very strong performer here. And what we've seen is the Bank of Japan essentially trying to step in to stave off these declines. So every once in a while, you'll see a flush lower for dollar yen as we see FX intervention, very costly FX intervention from the BoJ. Well, maybe their actions, their tightening, and more notably, probably the easing from other central banks could provide the basis for this market to roll over. Now, key to that is a decline through trendline support, which we've fleetingly done, but then didn't hold on to it. But crucially, this 151.8685, which is the low that was established here on the 6th of May. As things stand, we have tagged it, now starting to move higher. You can see that long lower shadow. Doesn't necessarily make you think you're going to suddenly roll over, but the short-term trend on the intraday basis, we do still have this pattern of lower highs and lower lows. So as long as price remains below this 157 level, there is a chance that this rally is once again going to falter. And in particular, if we do see the BoJ essentially decide to hike rates and lay out a pathway for potentially further rate hikes. Now, this is the relationship, as I showed you previously, between dollar yen and then the relationship between the Nikkei and the Dow. And so what we're looking at here is, you know, questioning whether we are going to top out for dollar yen, which is the line essentially. And if we do so, what might that do in terms of equities? Like I highlighted, the strength of the Japanese yen would likely hinder the likes of the Nikkei. So you're looking at the potential for this to roll over. Now, this is a relationship, as you can see here. This is the Nikkei divided by the Dow Jones Industrial Average. So it doesn't necessarily mean that we're going to absolutely top out, because both of them could rise. It just rises at a lower degree. But nonetheless, you can see here that the long-term uptrend here, now we've seen this recent rally up into a new high, but faltering somewhat. Certainly, if we did see a breakdown through your 36712, that would give us a view that we could see a wider pullback for this market. And certainly if it comes at a time where we see interest rate hikes from the BoJ and them laying out a stall to be tapering bond purchases, and that would likely raise the cost of borrowing. You know, it's not necessarily great for Japanese businesses on either side. So possibility of weakness for the Nikkei, certainly possibility of relative weakness compared to the likes of US markets. But as at the moment, we've seen this sharp decline here. And so let me just put on, say, the Dow on the same scale. We should be able to see the degree to which we've seen declines here. So we can see here, okay, since this peak, we've seen, you know, 3% down on the Dow, 8% down on the Nikkei, right? So that's that relative underperformance that I'm talking about. If we see strength in terms of the Japanese yen, you're likely to see relative weakness in terms of Japanese stocks. And so if we're looking at the possibility of strength coming into play for the Japanese yen around a potential rate hike, again, if we're seeing at that same time risk off play coming into markets and we're seeing equities suffer, the Nikkei could be a good place to be looking for that to play out. Another market I just wanted to quickly bring up is the pound against the yen. Of course, we're looking at the possibility of an interest rate cut from the Bank of England coming at the same time that we're looking at the possibility of a rate hike from the Bank of Japan. Well, we've been selling off pretty heavily of late, but the uptrend is very much clearly defined here. So watch out for this prospective trend line down below, a break through that support level, and crucially, this low down here at 191.37 would point towards us potentially topping out. Until that happens, the trend does still remain in play. This is very similar to dollar yen. The question mark here is, would a 10 basis point hike do enough to see the Japanese yen strengthen in a meaningful manner? Or is it just going to come down to needing to see really significant downside in terms of rates elsewhere around the world, which markets are generally expecting? So between the two, we're looking at the possibility of a topping out for likes of dollar yen, likes of sterling yen, and that could point towards relative underperformance for the likes of the Nikkei 225.